Anyways, let's just get right into it. So we'll start off with the news, go through the news of this week, go through when I trade and when I don't trade. Anyway, Monday we have JPY bank holiday, okay, and we don't have any high impact news. We just have more or less things that is not really important, things that you don't really need to be looking at when you're trading. So tomorrow we're just gonna have a low volume day, I would say. Like there's not gonna be as much of an influx of liquidity as you normally would see when you have a lot of news. And I would stay away from JPY pairs, but I'm gonna trade tomorrow, or at least not trade. You know, I don't know if I'm gonna cash a trade, but we'll see. Like I will look at the market. I'll at least tape read. Tuesday, okay, we have just some CPI where I don't have any bank holiday for JPY, which is pretty nice. So Tuesday I think it's gonna be a pretty good day for trading or trading wise. Just because, you know, we're maybe not going to see as much of liquidity in the market, right? But overall, it's going to be a pretty good day for trading, at least, trading wise. Even though we're not going to see like massive moves, we're going to see some moves because it would just be a normal good trading day without news. Anyway, Wednesday we have AUD CPI. Okay, we also have some both government Bailey speaks. It's the same thing as FOMC but for UK. So on Wednesday we're most likely going to see somewhat of an influx of liquidity. So Wednesday is also going to be pretty good to trade. Okay, so the whole Wednesday, so Monday, Tuesday, and Wednesday I will trade. Thursday though I'll not trade, just because we have CPI, right? And I don't trade CPI. So Thursday I'll stay away from market, but Monday, Tuesday, and Wednesday I'll trade. Anyways, Friday I'm gonna also trade. We have some PPI at 14:30, 1 hour before the market opened. The real trading hour starts. Anyways, yeah, so it will be like a pretty good week overall. I'll trade most of the day. I'll just skip out on the CPI because I just follow my rules. So I'm not going to trade any high impact news, and I will trade before or after. So I'll not trade for the whole day. So I'll just take Thursday off, right? But overall, the other days I will trade. Anyways, let's just get right into the charts, right? And as you all know, we will be looking at, we'll start off with a weekly chart on the DXY. And for those people in the premium or in the mentorship, okay, you already know because we spoke about the SPX yesterday more in depth. We talked about the bias and expectations going into the week, and I hold more or less my bias. Like I continue with my drawn liquidity and bias, at least for the weekly. So, but overall, last week, okay, I was bearish. I'm still gonna be bearish. The overall bias is still bearish, right? And this is gonna be my drawn liquidity here. Okay, we have filled this busy right here, right? Completely. More than, no, we actually 50% is here. So actually, it reacted off of it and it continued high, right? But it continued into this CB right here, and we'll go through the CB because there is some more extra PD arrays in that was like matched up with the 50% mark of that CB right there. And you can also see that we are in a weekly premium, right? So we're gonna find some good sells, or this is like what I'm predicting. Okay, so I'm predicting that we're gonna see some good, more or less, models. Okay, my model, we're gonna see a good STA model up in here in the premium, in the weekly premium. Then we can catch the weekly extension to the downside, right? Into the drawn liquidity. Okay, this is just predictions. Okay, so don't follow this. Follow, if you have a bullish, if you're bullish, stay bullish. If you're bearish, stay bearish. Or if you think it's gonna consolidate, don't trade, simply. So this is just what I'm thinking. I'm just telling what I'm thinking. But we saw a retracement, like I said, for the previous week, and we'll talk more about that on the daily charts. So you can actually go back and watch the week 52, and you can see that I predicted actually the whole week, the whole last week. Even if I don't trade, I still tape read, I still do my due diligence in the market, right? Because you gotta stay in that zone, you gotta stay in that. You gotta just follow the flow of the market, because that would just help you tremendously becoming profitable, right? Because then you get a feel for the market, feel for how the market moves, and also just it becomes much easier for you. Anyways, let's just go into the daily chart. So here's the weekly fair value gap right there. It was in an premium, okay, and we were overall bearish, right, on the weekly. That just means that if the order flow continues bearishly, right, if it continues to the downside, if the market wants to continue taking out sell side liquidity, it will react off of bearish PD arrays, right? And it reacted off of this. You can see right here, we had news. This was non-farm payroll news right there. And I actually said last week, because when we go into the 4 hour, we'll talk about these highs right here, because this was like a wall of liquidity, and I've talked about it so multiple times, or so many times, that I'm thinking that the market can't leave this. I said it, okay, if you go back and watch, but I said that the market could not go back, or should go back, because it can't leave like more or less that perfect of a more or less like liquidity above those highs. Okay, so I was just saying that the market would take out that liquidity, and it actually did, retrace into this 50% mark of this, and this new day opening gap. We'll talk more about that later, but then you can see we still have the drawn liquidity right there. Okay, so this drawn liquidity is still intact, and this is my ultimate drawn liquidity down here. So I'm seeking lower prices, or I'm not seeking lower prices, but I'm thinking, I'm predicting, I'm expecting that lower prices the next week. And this is just really good that we have retraced a lot, okay, because we have been really bearish. So it's good that we retrace a lot, and then, okay, we don't trade this, we trade the extension to the downside. So I'm hoping for more or less like a bullish Asia session, and then, you know, a sweep of that Asia session, and, you know, just a normal STA setup to the downside, so we can catch the whole weekly extension for those in the premium or mentorship. We'll just see that, hopefully see that tomorrow, and we'll of course have live talk tomorrow as well. Anyways, you can just see here, actually the daily was bullish. If we go back, I forgot to mention that, but the weekly is still bearish, right? So I'm seeking bearish order flow. I'm like looking at bearish PD arrays supporting price going down, taking the drawn liquidity, right? So I'm hoping this fair value gap, or the market reacts to this fair value gap and continues lower, seeking sell side liquidity. Anyways, we are also actually we are bearish now on the 4 hour time frame. Really nice to see. But I'm thinking that we will actually react with something in here. Maybe leave this intact, but we'll just see what happens. If we get an Asia sweep somewhere here, I'm taking it. Anyways, you can see here, reacted off of this new day opening gap. You can actually see, if we go into the 1 hour, you can see it much better. Wait, maybe also the daily. No, 4 hour, really good. 50 minutes. Yeah, you can see really like see how it reacted off of it. So it's a like, I utilize this, even though, okay, ICT says you should only utilize new day opening gaps like for 1 day, right? But I utilized it just because it was such a good PD array matching up with this fair value gap, and that's actually what you can do. You can still use those new day opening gap if it aligns with the overall market, right? Because then you can see the market. And here, if we go into the 4 hour once again, I'll show you what I said would not stay intact. Okay, this would not stay intact. Okay, these relative equal highs right here, Okay, I said previously that the market would most likely retrace up and take out those in the future, and we did right now. So now I'm thinking that the market will continue lower, right? So the daily, the weekly was bearish, the daily was bullish, 4 hour is bearish, 1 hour we'll see. 1 hour is also bearish. So we'll just see. Like I'm seeking lower prices. I'm seeking this drawn liquidity still. I still have the same drawn liquidity as I've had for past few weeks, and I actually thought that we would take out this with this move, but that's just even better for us, because then our drawn liquidity is intact. So now we just have a really good drawn liquidity for the DXY, and now we can just translate that to the other markets via externality. Anyways, let's just go right into EURUSD, right? So now when we have gone through the DXY, remember the DXY in your head, and now we can more or less translate it through and use it as an tool to see better, to find a better overall bias, to find a better drawn liquidity, to find a better order flow on EU. Okay, and you should use DXY actually more than you utilize the pair you're trading, because if DXY moves into a risk on or risk off market, okay, the other pairs must follow it, right? So they should follow it. Okay, I'm not saying they must, but overall FX market I would say must, but the index market is, or the indices market is a little bit different. Like you could still see bullish prices, but you're gonna see it has a much harder time. For example, if the DXY is bullish and you also have indices bullish like the S&P 500, then you'll see it has a much harder time being bullish or staying bullish if the DXY is also bullish, because that's just simple market relations or DXY correlation. Anyways, now use this in here. So I thought I deleted everything, but we still have the drawn liquidity, same drawn liquidity. Anyways, let's just go through this. So for EU, okay, we have swept this right here, moved into bullish, right? We have made a market structure shift, right? So we bullish, right, on the weekly chart, and we make some breakout structures. I'm not talking about those so much. Anyways, we have the drawn liquidity intact as the same as the DXY. Remember now DXY in your head, right? So the DXY drawn liquidity still intact. Here's my ultimate drawn liquidity. Here's my intermediate drawn liquidity. I'm gonna use this for the next week, right? And this I'm going to use like as my ultimate drawn liquidity, right? Because I'm really higher time frame. I'm not looking at the lower time frames as much as I'm looking at the high time frames. I'm always staying on the high time frame, because it's just much better utilizing the high time frames than the lower time frames, because otherwise you don't have any bias, okay? Otherwise you don't have any clear drawn liquidity. Otherwise you don't have the clear order flow, okay? And that's maybe why you're unprofitable, because you're staying at the lower time frames and not utilizing the whole market, or not utilizing what the whole market is offering. So you're not utilizing the DXY, you're not utilizing market relations, you're not utilizing DXY correlation, you're not utilizing the high time frames overall. So stay on the daily, stay on the weekly, even stay on the monthly, literally, if that helps you. Anyway, daily, we have actually changed to an bearish bias on the daily, but still the weekly is intact. And if you remember, the weekly order flow on the DXY is bearish, right? It continues, it reacted off of that fair value gap, and saw like the market wanted lower prices, right? It wants lower prices. That just means that EU should be bullish still, and we can utilize. So we should utilize bullish P rates to see where, because I'm seeking high prices. I'm seeking this. This is my lower time frame drawn liquidity. Notice that I don't use anything in here. I utilize this, and this is my intermediate drawn liquidity. This is my ultimate drawn liquidity. Okay, I always have those three. And I'm following the intermediate and lower time frame drawn liquidity right now. Also the ultimate, but I don't utilize it. Anyways, the daily was bearish. You can see with this market structure shift right there. But the PDA rate supporting it, okay, we have it's right now in, we have taken this right now, so sweep of this. I'll just annotate that. Going into lower time frames, going into the 4 hour, you can also see that we are still bearish on the lower time frames. But if you now, this is why you use DXY, because DXY was also bearish, right? That just means that EU is bullish because you utilize the DXY, because the DXY is stronger than EU, right? The EU, like the pair EU, should follow the DXY. So it is like, even if it's bearish, right? I still think it's gonna be higher prices for next week. Okay, I'm not changing the bias, okay, because I'm following the high time frames. I'm following what the DXY says. And if you just look at EU, okay, this is an example, you would be bearish. But if you utilize the DXY with EU and plus market relations and have a clear drawn liquidity, you will be bullish, okay? And you might be right, I might be wrong, right? But we'll just see what happens, because this is more or less my predictions, my expectations. And of course the market, this is why you should not use mine, you should use your own. So if you're bearish, you should still be bearish, right? Because you should always follow your own light. You should always follow your own opinion, because otherwise you won't even be profitable, because you have to learn yourself. Anyways, we have also taken this 4 hour low, and actually also this, so you can just use this instead as a sweep. But this is the high time frame sweep, this is the lower time frame sweep. Going to the daily, yeah, you can see the daily low also got swept. So it's just much easier utilizing this as well. Anyways, lower time frames, right? We were 4 hours also bearish, right? But I'm thinking that we're gonna see a market structure shift right there later tomorrow on Monday. We also have a fair value gap right here, not supporting price. And we also swept this. We are also in an weekly premium discount, sorry, because we are overall bullish. So we are in a discount right here, which just means it's really good. Look at this, you mean this? Yeah, the market could maybe retrace lower into this, but I don't think that it's going to do that, because if you look at the DXY won't go higher. I'm thinking if it goes higher, okay, then I might change the bias. So that's why I don't think, at least, we're gonna see a retrace into this fair value gap, because that would just ultimately not following the DXY, right? And if the DXY continues higher and reacts, if you guys remember the fair value gap, which I annotated, and it reacted with, right, it's probably gonna change the bias. Anyways, let's just continue. 4 hour was bearish, right? 1 hour, it's actually bullish right now. We have this SMT trap, smart money trap. Yeah, we'll see, Remy, and we'll see trading teal. Like, of course, but if it continues lower, like, I might change the bias, right? I'm thinking this will stay intact. And if it doesn't, I might change the bias. Anyways, 1 hour is also bullish. And we have a fair value gap right there. And you can also utilize half point of this week or half point of this week. So we have 3 periods supporting price, continue higher. Anyways, let's just go into AUD/USD. Now remember EU and DXY, right? So remember both of those, and now we're going to use the DXY correlation and also the market relations on AU. So for AU is looking really good. Okay, first of all, we have an order block right there, algorithmic order block right there. We also had one on EURUSD. I forgot to mention. I'm sorry. You can also see this one right there on the weekly. So that's why I'm thinking that it will stay intact right here, because otherwise, like, it would just breach the 50% mark of that fair value gap. Anyways, fair value gap right there. I'm not gonna have it annotated. I'm just gonna have it in my head. So I'm seeking higher prices on EU, lower prices on DXY. So this should also be bullish, right? Anyways, we have a really good drawn liquidity, a really good intermediate drawn liquidity. Here's the lower time frame drawn liquidity, or the first drawn liquidity. Here's the intermediate drawn liquidity. Here's the ultimate drawn liquidity right there. These big equal highs right there. Anyways, we are bullish, right? We have an order block, algorithmic order block right there. Let's just go into the daily. We are also in a weekly discount, right? So now you can see right here, weekly discounts. So if you are bullish, we should continue higher. Here's also, we have reacted off of this fair value gap right there, not even into the consequent encroachment, and we are it reacted really bullishly. We got a really big push right off of this, and it did not even trade into the half point of it, which just means that the order flow is really bullish, and that it wants to continue higher. Anyways, yeah, you can also argue breaker block right there. Yeah, daily is still bearish, right? But the weekly is overall bullish, right? But if you go into the 4 hour, you can. No, we're still bearish with this breaker structure, but we got a really good push off of this fair value gap. Wait, might even have that annotated. Because it's pretty good utilizing it, see where the market wants to go. Because maybe it wants to go into a discount zone right here. Maybe got the Asia session lower, sweeps this, go into here, continue higher. Now it gave you some pre-market sauce if it happens. But yeah, overall, like this was my weekly. My last week was bearish, right? I said still bullish. Overall still bullish, right? Because I'm still bullish right now. And here I was still bullish, right? On the weekly. But on the lower time frames, I said we were gonna most likely take out all of the liquidity down here, just because the market won't leave that behind. So I can still say a retracement on the weekly, even though I'm still bullish, right? Because often when we retrace, a lot of people think that they don't see the whole move just because they are in lower time frames, so they think this is bearish price action, that we're gonna see lower prices all of a sudden. But the market is still technically bullish if you look at the weekly chart, right? So I'm still gonna seek higher prices for EU, right? Or EU and AU, and lower prices on the DXY. Just because if you look at the order flow, it just tells me and tells you guys what to look for. Anyways, 4 hour, just still bearish. I'm thinking we're gonna get the market share shift soon. 1 hour, bullish right now, and we have some periods. We have a long wick right here. Okay, you can annotate the half point of that wick, and also 25% mark, depending on how bullish, overall bullish we're gonna be. But we're gonna utilize the highest time frame fair value gap, right? Because you always gotta utilize the highest time frame fair value gap in an equilibrium zone, sort of say. Depending on if you're bullish or bearish, it's premium or discount. But yeah, now we're utilizing discount just because we're overall bullish, right? But it's pretty simple. Y'all understand that already. Oh, do you want me? Wait, I'll just stop the recording so I don't have to edit it.